Hey guys, welcome back to the show today. I'm here with Australia's finest content creator, crypto trader, Josh. How are you doing today?
I am going great. Thank you, Maurizio. How are you?
I am awesome. Thank you so much. For those of whom they don't know you, do you mind to give us an intro and tell us about yourself?
Yeah, so I've been in crypto since 2017. That's when I first found out about Bitcoin. And during 2018, in that bear market, I kind of almost left crypto a little bit because I just saw it going down and I heard on the news, like, oh, it's a scam, it's crashing, everything like that. And then so I didn't pay much attention during 2018. And then when I saw it start going up quite a lot again in 2019, that's when I thought, well, it's obviously not a scam or anything like that because it wouldn't be recovering so much if it's already been found out as a scam and it's going down. So I looked much more into it back in around like early 2019, and basically every single day since then, I've been looking into crypto, learning how to trade, and then made my YouTube channel around late 2020, around the last bull market, and basically been full-time crypto ever since then.
I remember that round two was almost 20,000, 19,000 and something. Some of my friends said, hey, dude, sell it. Sell this thing. Okay, no, we're going to 500,000. I had no idea what was
Yeah,
going
yeah,
on.
yeah. Always those calls though, every cycle. Like back in 2017, there was people calling for, oh, maybe it's going to go to 25 or 30,000. It just didn't get there. But then in the bear market in 2018, everyone was saying like, oh, it's going to go to 1,000 or $500 and didn't go there. And it was the exact same time this time around. Back in 2021, everyone was saying like, oh, 200K, 300K. Just didn't go there. And then in the bear market in 2022, everyone was saying like, oh, 10K, 8K, and it just didn't go there. So a lot of people just overshoot it sometimes. So I try and, I guess, be a little bit more conservative after learning those lessons.
Yeah, same. I think we have a lot of similarities. It's going to be an interesting conversation for sure. I also was expecting way, way, way higher than 70,000, if we want to call it 70K. For the
Personally, yeah. I was expecting at least like 100K. To be honest, I wasn't expecting, the high like 200, 300K last cycle like some people were calling. I was expecting 100K, but yeah, we didn't even see that, which was surprising for me. But
Yeah, same. I mean, at the end of the day, it's all about greed and fear, right? They move any market. And most people, sadly, they'll buy the top and sell the bottom. I think, especially with an asset which is so volatile like Bitcoin. And then, like we were saying
yeah.
off camera, it drags everything with him, right? When it goes up, there is like an alt season, and we can talk about maybe the seasonality of the asset. But where do you think we are now in the market?
We are basically in like the early stages of the bull market, pretty much. Because, I mean, if you simply look at the halving cycles, most people in crypto would probably know about the Bitcoin halving cycles, and they're kind of 4-year cycles. And so far, they have proven to be working pretty well. And we're basically, a few months out from the halving, and usually the bear market bottoms out, give or take, around a year before the halving. So it's fairly safe to say at the moment that yeah, we're out of the bear market. We're in the early stages of the bull market, but like the real crazy bull market hasn't even started yet because we haven't even seen the halving. And usually Bitcoin breaks the all-time high after the halving, usually a few months after the halving. And then that's when things start going more crazy because once it breaks the all-time high, you hear it about it in the news cycle, in the mainstream media. And then that's when, you see altcoin seasons and everything goes crazy after that. So I think right now we're kind of in the early stages of the bull market.
Yeah, I agree. I also feel like we have bottomed. I think 15, call it 16,000 was the bottom for sure. I've been DCing ever since, so far so good. And how do you feel about the ETF? Like we have 13 applications in the making, and January
Yeah.
definitely should be.
Yeah, that's definitely very interesting. I mean, from what people are saying, from what I'm hearing, it's looking like it could be approved sometime soon, possibly January is the word on the street. Obviously, nothing's guaranteed at the moment, but it's looking good so far because I mean, it was I think Grayscale that won their lawsuit against the SEC, which basically meant the SEC, in order for them to deny the ETFs now, they're going to have a really good reason. That's going to be it's going to be a different reason from how they denied the Grayscale ETF. Unless they can somehow come up with some new reason, which if they do, they'll most likely get sued again, and it's just going to delay it. But I think it's inevitable. Soon enough, it's going to come. And then once the ETFs are here, then that's just going to be a whole new wave of buying pressure from new investors.
There was an emergency meeting a couple of days ago where the SEC had a call with all the applicants at the same time, which I think is bullish because, like you said, there is a window, January 5th to January 10th, where they have to, and I think they will approve them all together at the same time. They are not going to give anyone market advantage, I think.
Yeah, that makes sense.
Which means, like you said, that's go time. If they say, okay, institutions now are welcome to buy this asset, oh my, like there's going to be, maybe that's what I wanted to ask you as well. Some people are saying, oh, we're going to see a super cycle coming in. There's going to be a lot of money flooding in the market. Do you buy into it? Like, what's your view there?
In regards to the super cycle, it could happen eventually, but it's more of a fiat currency collapse scenario, in my opinion. So if we get to the stage where, and I think, in my opinion, this is inevitable, it's only a matter of when, when, for example, the US government eventually defaults on their debt. Right now, they're over like $33 trillion in debt. They're definitely entering into a debt spiral where, soon enough, the interest on the debt is going to be such a large expense that they'll barely be able to fund it just from tax, and they'll have to continuously print more money in order to cycle over the debt. And it's just going to be a vicious debt cycle, and then that's ultimately going to lead to some sort of major collapse, most likely significantly devaluing the US dollar, which in turn will devalue a lot of other fiat currencies because most fiat currencies are kind of backed by the US dollar. And so in that scenario, that big, fiat currency collapse scenario, we could end up seeing, a super cycle, not just in Bitcoin, but a lot of sort of scarce assets. So like gold, Bitcoin, land, real estate, a lot of things will go up quite a lot that are scarce and, valuable in terms of fiat currency. So if you're measuring it in dollars or whatever, then, the price could go up significantly. But that's kind of in that massive, fiat currency collapse scenario, which I think will happen eventually, but I don't know when exactly. It could happen in a few years. It could happen in a decade. I'm not too sure exactly when it will happen.
Inflation is terrible. Like cost of living is going up exponentially. Assets are getting more and more expensive. Like if you think about it, when I was in my teenage, when I was younger, I could see families with one person working and they could afford to buy a property. Now you have two young workers, they both work, a couple, and they can't afford to buy. Like it's insane. So like you said, I mean, it's inevitable. We've seen currency collapse before, before the dollars, we have others and didn't work. So
especially with, conflict around the world, you have countries like China wanting to get rid of a lot of their US treasuries and go into gold and things like that just to reduce their risk in case there's a conflict. So, fiat currencies have that extra risk as well because they're very centralized and they're backed and controlled by governments and central banks, which means if two countries get into a conflict, then the fiat currency might have a significantly different value just based on, who the government is and things like that. So that's why I think the best form of money would be a money that's not attached to any politics or government and just, a neutral money for everyone. So gold was a great form of money, but then, we went off the gold standard, and then I think Bitcoin could be our next best shot at a good form of money.
That's a really good point. And so sometimes, when I think about it, I don't know how to place it, because then you have like you said, you have also places like El Salvador. They've gone like legal tender. Argentina now is looking, they might follow. The first step is always the hardest, but then I think it becomes a trend, right? And then you see people, nations, you'll see money flooding into funds. Like I don't know how you feel about it, but I'm actually excited about some sort of regulation, because I think big money are going to only play the game if it's, quote, fair. So I think these kind of ETF, some people are worried about BlackRock because they own everything and they'll do some shady stuff. I get it, but at the same time, if the thing is wild west and there's no regulation whatsoever, I mean, think about FTX, think about Terra Luna, all those things, like big money are not gonna risk it. Whether if you say, okay, there is some sort of a approval. I also think Binance was annoying people, the largest exchange, kind of not following the rule, but controlled by a Chinese CEO. I mean, not to get into politics, but I think that was annoying. Whether Coinbase, which has, by the way, most of the custody of the ETF applications, 10 out of 13 so far. So I think if you put the pieces of the puzzle all together, I think it's starting to make sense. Some people are saying that the ETF won't be approved until Michael Saylor is dealt with, but I don't think Michael Saylor is a problem. I think he owns a small portion of Bitcoin. I mean, huge amount, but
Mm.
it's what, 1% overall.
Personally, I don't think Michael Saylor is a huge problem in the eyes of the SEC in the US because MicroStrategy is a US company, so they have, kind of control, I guess, over that, and they're able to tax that. Whereas, if it was an offshore exchange like Binance, obviously it's not a US exchange, they might not want to give that much, control over to something like Binance. But then, with Coinbase being a US exchange, they kind of want to keep that in the US if it's going to be a US ETF. So that makes total sense. In regards to like the game theory of Bitcoin, I totally agree. Once a few people start adopting it, like El Salvador, it's going to start slowly like that. But then, other people will start picking it up once they recognize that these strategies are working. For example, in the coming bull market, if Bitcoin's going up significantly, we're going to see companies like MicroStrategy, their share price is going to go up significantly because they hold a lot of Bitcoin. And same with countries like El Salvador that have gone with the Bitcoin strategy. If Bitcoin goes up, then they're also going to, gain that success from Bitcoin. And then a lot of other companies and countries in similar situations, maybe at similar sizes, they're going to look at that and see, okay, Bitcoin's maybe a way we could improve our situation as well. And it's just going to be a chain reaction, pretty much.
I
Yeah.
completely agree. And if you think about where Bitcoin is becoming popular, like in Turkey, all-time high, in South America, all-time high compared to their currency, right? Because their currency is so. If you think about
Yeah.
if the dollar is destroying itself at 10% a year or whatever, I mean CPI or CPI index,
Yeah.
which is a complete lie, but let's call it
Yeah.
3-4% a year, yeah, whatever, depending on how you measure it. But let's say we agree on 3% a year. Other currencies, not as strong as the dollars, are going much, much faster downhill. So you have places like,
Yeah.
for example, Argentina, places like Turkey, they've lost like a huge amount in a short amount of time. So then Bitcoin becomes that kind of hedge against inflation, store of value, whatever you want to label it.
Yeah. Yeah.
So that becomes interesting, right? To see how other people are using it.
Yeah, exactly. And if you actually look at those, charts like Bitcoin against, the Turkish lira or the Argentina peso, and if you look at those charts, that's basically the super cycle, right? But it's playing out in those weaker currencies first, where those currencies are collapsing, and Bitcoin is absolutely skyrocketing into fresh new all-time highs right now, but versus those weaker currencies. So that's the super cycle actually happening, but it's happening in the weaker currencies first, and eventually it's going to happen across pretty much all currencies, all fiat currencies. Then the US dollar will most likely be the last one to fall because the US dollar is the strongest out of the fiat currencies, but it still has a expiry date, in my opinion.
You know what they say, history, it doesn't repeat, but it rhymes often, right? So
It rhymes. Yeah.
I think the time for a currency is like 120 years. I think we are more or less
Yeah.
close, not that far away from that. So maybe we'll see something else coming in.
Ray Dalio's when he talks about the empire changing hands and things like that. With we went from like the British Empire to the US Empire, and we've been the US dollar's been kind of number one for the last century, give or take. If you look at the much larger century long cycles, it's like roughly around the time where the world reserve currency kind of changes hands, and it's possible Bitcoin could fill part of that void.
Do you see in your portfolio space for anything else? Like, for example, we touched lightly on metals like gold, silver, maybe real estate, maybe S&P or stocks, of course, crypto.
In crypto specifically, primarily at the moment, I am quite heavy in Bitcoin and fairly lightweight in altcoins. I do have altcoins, but that was kind of my strategy, especially over the last year, usually during, weaker crypto markets like in 2022 and maybe early 2023. Bitcoin does often hold up better than a lot of the altcoins out there. Obviously, there's going to be some outliers in the altcoin market. Going forward in the bull market, basically I'm looking to transition that strategy, so move a portion of my Bitcoin into altcoins that I'm looking into. And because oftentimes during the bull market the altcoins outperform Bitcoin, so it's just changing between the different cycles. So right now, primarily in Bitcoin, I do have my second altcoin is ETH, so Ethereum, and then after that I just have smaller altcoin holdings, not super heavyweight at the moment. So coins like Chainlink, a little bit of Polygon, a little bit of Solana, and a little bit of Prop Chain and other little coins like that. but I'm not super heavy in those at the moment. But I am looking to allocate a little bit more towards the altcoins in the next 6 months or so in preparation for the bull market.
Yeah, fantastic. Like we said off camera, very similar to what I'm doing. Like majority of my portfolio is Bitcoin. The other portion I have, half is Ethereum, and then the other half is in between Chainlink, Cardano, and a few others. I don't mess around with meme coins. I mean, I know you can do a huge amount. I mean, look at Bonk, what it's doing now, or I
Yeah.
mean, we've seen in the past a lot of meme coin flying. I don't like to gamble with those things because even though, I mean, for me the main thing is Bitcoin, and like you said, I use alts to multiply my Bitcoin. That's the end goal.
Yeah.
So
Yeah.
I think and there is so many ways to play this game, right? Depends on how risky you want to be, how old are you, how much money you want to, it's like going to the casino and playing on the roulette. I think it's
Yeah.
completely
Yeah.
subjective to the person playing the game itself. But I like to play in a way where, exactly like you said, following seasonalities. Now I think the dominance was Bitcoin was quite significant. I think we will see going up and down depending on the market itself, and Bitcoin is going to go first. It's going to drive the market. Especially, I mean, these ETF, some people are saying, oh, it's priced in. And I'm like, yeah, okay, the excitement is priced in, but wait until they approved it and the money coming in. Like you mentioned
Yeah.
something earlier,
Yeah.
super interesting. I mean, think about if you are Apple, right, which they have trillions of dollars in cash on their bank account. Oh, wait there, Michael Saylor, how is he playing for him? Well, actually, he made a lot of money. I think it's up almost 40% now. And he's been buying
Yeah.
the top of the previous run.
Yeah.
So
Yeah, like he hasn't been, the best trader in the world, right? He just buys whenever, whether it's at a local top, whether it's at a bottom, he just buys whatever. He doesn't wait for a dip or anything, and he's still up like give or take $1 billion. So
huge,
yeah,
huge
it's
amount
working
of
well
money.
so far.
Yeah, and he's the proof that DCA works. And then you have companies like Apple saying, okay, actually, wait there. What if we take 2%, 1%, half a percentage, and we just invest into crypto or Bitcoin? Because I don't think Apple or these major companies are going to go and buy Shiba Inu. I mean, they will invest.
Yeah, no.
I mean, that's
Yeah.
my opinion. So that they will buy into it, and then you have a bunch of companies with a huge amount of capital buying a small percentage for their portfolio. It's going to move the thing entirely. Like Bitcoin is a teenager. It's a 14 years old asset. There is going to be, I don't know, I think it's going to be super interesting. Do you have a strategy going into the next bull run?
It's a little bit more of the same with what I'm doing. Just right now, I'm DCAing into Bitcoin and larger altcoins. But then the main change that I'll be doing is just, looking further down the list in altcoins and just picking out, some good ones. And, if I find some good ones, I'll be mentioning it on social media and things like that. And then just basically, gaining a little bit more weight in the altcoin space and, being a little bit more lightweight on the larger ones because, during the bull market, that's where usually taking a little bit more risk can be a lot more rewarding. Whereas, during something like 2022, when the market's going down, you don't really want to be taking excessive risk because you can lose a lot more in a down cycle. So that's where it's like at the moment, I'm still quite heavy Bitcoin, but yeah, in the middle of sort of transitioning to altcoins. So that's the main change. And then just working on really honing in on my trading skills. So right now I've just been taking, longs, shorts, things like that, just doing more of that, slowly increasing position size. And yeah, so that's pretty much the strategy moving forward, and then sharing it as I go on my social media.
At the minute, I have my portfolio, which is divided into 3 bags. So one bag is never sell, I don't care. If we go to 1 million or if we go to 0, never sell. So that's a portion of the portfolio. Then I have 2 other chunks. One chunk I play with altcoins. So I use those kind of gambling coins to multiply my Bitcoin. So because at the end of the day, the goal is buy as many Bitcoin as I can, right? And then the third bag is the one I use to play the market. DCA in, DCA out. For example, we start going and flirting with the maybe all-time high, the 70,000. Maybe it's time to DCA out, or maybe it's time to think about strategy. And this is the most interesting part because nobody knows what's happening. Of course, you have people like you with amazing TA. You can, predict the patterns and all these things. But for someone like me, I have no idea. I don't trade. I'm more like a hodling type of person.
When it comes to going in and out of assets, I kind of, first of all, break down the crypto market into different sections. So, for example, a lot of new people to crypto, they'll come in and they'll see all these coins and they'll think they're all roughly the same. Maybe they do some different things, but they're all crypto coins. They're all different forms of money. I don't see that at all. I see Bitcoin as money, and then I see larger cap altcoins and a lot of like the good projects. I see those as investments, and then really small altcoins or meme coins, I see those as basically gambles. So I see, there's money, which is Bitcoin, and then I see, investments or short-term trades, and then I see just gambling. So, and then I allocate, based on that. So, going into an up cycle, obviously it makes sense to be a little bit more investing with your money. So that's why, I invest my money, which is Bitcoin, into, the altcoin space. And then, sure, I might have a very small amount, like 1% or something, just a very small amount that like you could, gamble with a little bit, take a higher risk on some of those smaller coins. But it's like that's what I see. So, and then with the smaller coins, with what's considered like gambling or short-term trades, those are the ones where you want to be pretty much in and out of. You don't want to be holding for months or years. If you get like a smaller coin that pumps really hard, you could literally just hold on to it for a few weeks or maybe a month or maybe just a few days, and really like don't care about holding over the long haul, because once the bear market comes around, those things can crash 99%. So that's something to think about as well. I'm usually in and exits a lot quicker in smaller coins, in those short-term trades and gambles. And then in the investments, so for example, I see something like ETH or maybe Solana as like an investment, not just a short-term trade. And so that's something where I might sell a little bit around where the market might look like it's getting a little bit overheated, but I might not necessarily sell everything. And then Bitcoin, I just treat Bitcoin as sort of money. So it's like, that's kind of like a long-term savings account. So if I sell Bitcoin into fiat currency, I think of the fiat currency as a short-term trade. So I think of stablecoins almost like an altcoin that goes up against Bitcoin during a down cycle in a way. So it's like a different mindset altogether, where I see, the only reason to hold on to fiat currency, like a significant amount of fiat currency other than just paying bills and things, is if you really think Bitcoin's going to go down, you can maybe acquire more Bitcoin. But other than that, it's for example, if you're holding US dollars, why would you want to take profits in US dollars into the Turkish lira, right? The only reason you would want to do that is if for some reason you think for a short period of time the Turkish lira might actually outperform the US dollar. So you could take that short-term trade or that quick investment. But ultimately you would want to hold the better form of money over a long period of time. So that's just my thinking when it comes to Bitcoin. I see that as money. And then altcoins, I'm kind of in and out a lot quicker. And especially, in much smaller altcoins, low liquidity meme coins, that's like extremely short term. So yeah, that's my thinking around all of that.
When I speak to people, they have no exposure in crypto. They say to me, yeah, but at some point you want to sell your Bitcoins. And I'm like, to buy what? I mean, what am I buying? Bitcoin has been the best asset, performing asset. So what am I buying? Like what, fiat, like dollars, is going to destroy itself. Like 10% inflation means in 10 years, you got nothing. Your purchasing power is nothing. Like you can't buy anything anymore. So what do you buy? Then you have options, but then, we go back to the same dilemma, which is gold is tricky. I love metal, by the way. I love precious metals, but it's not easy to transport. You don't know where to store it. If you give it to someone else to store it, you lose custody. I mean, real estate is funny. I think someone is allowing you to own it. Okay. So, what happens if they don't want you to own it anymore? So, I mean, we've seen with some...
if you can't pick it up and move it, and if like a government can tax it to any degree, then it's not truly yours, really. It's like having Bitcoin sitting on an exchange. It's not truly yours.
Exactly. And then stablecoin, I mean, USDT, Tether, I don't know, like questionable. I mean, maybe USDC, the Coinbase, maybe it could be more stable, quote, but still, I don't know. I'd rather hold Bitcoin. And I know it sounds crazy because Bitcoin goes down 80%, 70%. I mean, technically it's unrealized losses because if you don't sell, you don't lose. But watching your portfolio going down 80% is not fun. The volatility, I think it will diminish, but still we are discussing about half of maybe 50% of your portfolio going, quote, down. And I don't know you, but for me, it's not been fun, even though I've been here a few cycles.
It's definitely something to stomach for sure. That's where I see it as like a long-term savings account. So if I needed to, have money in a week from now or a month from now, I wouldn't put it all into Bitcoin in the hopes that it's going to be the same value or more in a week or in a month, right? I'll just keep that in something that's relatively stable in the short term, which fiat currency in the short term does do an okay job at the moment with, short-term stability, but it's over the long term where Bitcoin, shines, and fiat currency is actually quite volatile over the long term. People, don't even realize this, but the whole, 2% inflation, that's actually long-term volatility for fiat currency because it's always losing value. So like when you hear, oh, we target 2% inflation from the Fed, that's basically, a way of saying, okay, we're going to try and decrease the value of the US dollar every single year. That's our target, where we want to decrease the value of the US dollar every year. Like they don't want it to retain its value. They don't want it to increase in value. They always want it to lose value. So it's like, why would you hold on to something over the long term that's literally designed to lose value? So yeah, so I would only hold into fiat currency over short periods of time, or if I think Bitcoin might be going down, or if I need a certain amount of money in a week or in a month, it does all right with that. But over, speaking about the long term, years from now, 5 years from now, I'll just hold on to Bitcoin because I know, with a high degree of certainty, obviously you can't know for sure, but I know that, Bitcoin has done a lot better than fiat currency over the longer term. So,
And when it comes to hunting for the next stop or your exit strategy, I mean, do you look into, I know you are a super skilled trader, so I can't wait to pick your brain here, but I know there are people they look into time as opposed to price, and there are people they look into prices as opposed to time. Do you have a preference or do you use both? What's your strategy?
definitely, it's important to consider as much data points as you possibly can. So I personally look at both, because it's, at least so far in crypto's history and Bitcoin's history, it's pretty clear that there is, fairly accurate cycles in terms of time, mostly built around the halving and also built around, global liquidity with the Fed raising and cutting rates. So there's that sort of like time-based cycle, but then there's also, realistic price targets. Like for example, it would be unrealistic to expect $1 million Bitcoin in a year, but also it would be unrealistic to expect, a $10,000 Bitcoin or $5,000 Bitcoin in a year. So it's like you can kind of use that to narrow down maybe a rough estimate for a price, and then you can also use those, halving cycles and liquidity cycles to try and narrow down in terms of time. And you can never be 100% accurate, but you can just try and narrow it down as much as possible and get a decent estimate for where it could be.
Yeah, super well said. I agree. I also think for the next cycle, so like you said, going to the halving in April, more or less. I mean, we don't know the date yet, but it's going to be more or less mid-April. I think what happened in the prior cycle, we finished early. So many people have been caught by surprise, myself included. I would have never guessed 70, like I said, was the top. So I think, I mean, it's my gut feeling. I could be completely wrong here. Many people this time are going to finish early. So people are going to be way too conservative because they're going to go, wait. We're going to get to 90K or whatever. Let me take some profit, maybe heavily profit. And then this thing does the unthinkable and we go into a wave. And I don't know. I have this feeling that because usually the market seems to compensate itself. And I think we've gone a little bit below expectations. So I think we might see, and like I said, I mean, I'm like you, I'm super conservative. I don't think we will go like a 500,000 or whatever. In order for Bitcoin to get to $500,000, we have to match the market cap of gold, which is like what, 13 trillion, more or less. So that's a lot of money. I don't, like you said, we don't know. I don't know. I'm just speculating based on what I think. It would be amazing to see Bitcoin at $500,000 a coin. I wouldn't complain. Trust me, because like I said, I won't sell all of it. I have my bags. I have my my pieces that I play with. I don't know. I think at 100,000 you'll have a lot of selling pressure because that's like a psychological number. There is people they maybe bought at 1,000 or 10,000. That's 10x.
I agree. I think there could be, some people that kind of have like bear market PTSD that will, sell out early as soon as we kind of break the all-time high. They're like, oh yes, I've made some profits. If they for some reason didn't buy it or didn't DCA during the bear market and they just bought the old all-time high and they're finally broken even, they're like, okay, I'm going to get out. Or as we're getting close to 100K, it's like, oh, I know what happened last time. Everyone was calling for 100K. That didn't happen. I'm going to sell. So I think because of that, yeah, there's the potential we could actually overshoot it, where if a lot of people are selling too early, but then there's actually demand from the ETFs that are driving it higher, and then those people are kind of caught in a short squeeze where they're like, oh, I've sold too early and I want to actually get back in, and then they're just pushing it higher and higher and higher. So that's also a possible outcome as well, for sure.
For the longest you hodl, your capital is going to grow. So, maybe you go into the beginning and it's like, okay, $10,000, which is still money. So I don't want to, but maybe that 10,000 becomes 100,000, 100,000 becomes a million. So every cycle you go, holy, I'm down 90% of 10,000 versus I'm down 90% of a couple of millions. And that changes, entirely. But I think what excites me the most, and again, I don't know, I'm just speculating, even if we go into another run, and even if we get into the 100,000 range or whatever it might be, technically we should go, the next bear market should be where the top of the previous one was. So maybe we can call it 50K to be conservative, but still, if the bottom is 50K, well, that's happy days. It means, your portfolio, like you said, is going up over time. So I love to measure the bottom as opposed to measure the top, because if you measure the bottom, it's like, it's a no-brainer. This thing is going up, right?
Yeah, exactly. Yeah. And I think just looking at, the drawdowns of the bear markets in earlier years for Bitcoin, it had, drawdowns close to 90%, and then it had, 85% drawdowns, and then 80% drawdowns. And then the latest bear market, it was something like a 77% drawdown. So yeah, each drawdown in the bear markets, as you said earlier, Bitcoin's slowly becoming less and less volatile. There's less upside with every bull market, but also less downside with every bear market. So it's slowly gaining stability as mass adoption grows, which also means in the next bear market, it might only go down, 60%. And then in the one after that, it might only go down, 50%. And so eventually, it's sort of flattening out to, a more stable currency.
Yeah, exactly. That's how I like to see it. And I don't know. I mean, there is a part of me who's thinking, this is the PSD, like you said, the conservative side who said, hey, we're going to go maybe 120K, 150, and then maybe go down 60% to maybe 50 or that kind of stuff. But I think this ETF could potentially change the game entirely. And I don't know. I mean, I'm not saying it's all rainbows and unicorns when you have BlackRock involved and all these institutions. But they know, they've been watching the asset for the last 10 years. They know what this thing is going to do. And they know, I mean, look at Saylor. I mean, Saylor is not selling, period. So, and, if you look into other people they sold, like Elon Musk, for example, and he never wanted to sell, but he had to because he had a liquidity problem. Okay, then, it's in retrospective, looking back now, it's like, oh my, I knew I shouldn't have sold, but I had to, So I think people are watching with popcorns, watching all those companies doing all sorts of things. And if you are someone who has a lot of money on the sideline in the bank, destroying itself, actually, you don't even have the money. The minute you deposit the money in the bank has your money. So you lose.
Loan to the bank, basically. Yeah. Yeah.
Exactly. So you lose both. You lose custody and you lose the value straight away, because like you said super well, the fiat currency, doesn't matter which one, is destroying itself. So then how do you protect yourself? Well, hello, I got this thing called Bitcoin. And if you look into banks and all what they are doing, they are playing with all these currencies. I think it will be much easier in the next 5 years to have a bank account or an app on your phone who has actually stable coins of some sort. So you don't have to go through some troubles and exchange them and whatever. You can literally swap them through a digital asset. It could be a bank stable coin, it could be a CBDC, whatever. Then you will have a more regulations around exchanges, which means you can, I also think banks they're going to offer services to exchange from CBDCs to crypto straight away.
Yep.
And then, of course, they'll keep the custody of your Bitcoin, which is not good, but whatever. So it's going to become easier and easier. I think I was talking to Da Vinci last night, and he said 4% of the planet is in crypto. 4% or somewhat that number. That's nothing, man. Nothing.
Yeah.
Nothing. So besides you, me, and a bunch of crypto enthusiasts and maybe some investors, there is nothing else. It's super early. I don't know if you agree, but I feel like, we are here discussing some huge amount of gains. Like even if Bitcoin goes up, let's say to 100,000 and it does 2 or 3x, I mean, this year alone was like what, 160% up. I mean,
Yeah, something about that. Yeah.
there is nothing else. I mean, the S&P doesn't go that. Gold does 5% in a year, if anything. So,
Mm.
I mean, if you are someone who has money, you can't. I mean, you have to look into this thing and say, hey, maybe I'll play conservative. Maybe I'll go in with 2%, 1%. But this thing is kicking. So,
Yeah, yeah. That's the thing. These sort of returns, with us in crypto, we're so used to seeing massive returns in some altcoins, right? We see like 50x gains, 100x gains in some altcoins just in the span of a few months. And so we kind of get used to seeing, oh, it's just 100% gain. That's no big deal. But to people in traditional markets, in stocks, in real estate, in precious metals, 100% gain is huge. Or 50% gain in a year. That's massive. That is a massive return. And in traditional markets, you're talking about tens of trillions, if not hundreds of trillions of dollars chasing after, a 5 or 10% return. So when they see an asset that has maybe a relatively low risk over a long period of time, potentially huge upside, it's basically an asymmetric bet. It's pretty much a no-brainer. And then the ETF is basically a doorway to let in all that capital into Bitcoin. So it's definitely going to be very exciting in the years ahead. I would say the only limitation for potential upside for the price would be how much the miners are actually mining, because you have to remember that the miners are almost constantly selling to pay for electricity and pay for new mining rigs. And so I look at the Bitcoin halving as kind of like raising the price ceiling for Bitcoin. So the miners are kind of like putting on a price ceiling, because obviously, new Bitcoins mined every day. Right now, roughly 900 Bitcoins mined every single day, which means if the price of Bitcoin went to $1 million right now, in order to sustain it at those levels, if no one else sold, if it was just the miners selling, they're selling $900 million worth of Bitcoin. If the price was $1 million, they're mining 900 Bitcoin a day. So you're going to have to get $900 million buying Bitcoin every day just to sustain it at $1 million right now. And there's not 900 million buying Bitcoin every day right now. So we can't sustain it at that price. But with the Bitcoin halving, it makes it so the miners are mining less Bitcoin every 4 years, which means they have less to sell, which means, it basically raises that price ceiling on Bitcoin. So that's basically a short-term limitation on how high the price could go. Obviously, we could do a big blow off top and come back down, but we can't sustain it. Like, in my opinion, it will be difficult to sustain at like 3, 4, 500,000 within the next 1 or 2 years, because there's still too much Bitcoin being mined by the miners that will be selling that every day. But eventually, with enough halvings, the miners will be mining, not much Bitcoin, and that's raises the ceiling for the how high Bitcoin could go.
I also believe we might see a God candle, like a week or something, going up, but
Yeah,
then
yeah,
you'll have the sale pressure. I mean, there's going to be people selling into whatever other assets, altcoins, fiat, stable coins, to then try and play the game and rebuy lower or whatever. When you sell Bitcoin into the market, it's because someone is buying your bag. So at some point, the price is going to be too much for anybody to go, let's do it. There's going to be people like Sailor, maybe El Salvador, maybe Argentina, they will DCA into the market. But like you said super well, would it be powerful enough to sustain the $1 million Bitcoin? Probably not, but it will move the market for sure. But I think the retail has played so far, I mean, with the exception of a couple of institutions or companies like MicroStrategy, maybe El Salvador, some sort of it's been a bunch of weird variables in the bucket, but the majority, I think it was retail. So we have to consider, like you said, the fact that now the game is going to another level where, and I think we need it. We need money. If you want Bitcoin to go to 100K or 200,000 or whatever, you need people with money to play the game. Otherwise, the retail people is not enough, right? So yeah, it's going to be definitely an interesting
yeah,
couple of weeks ahead, because January is not that far.
yeah.
So
Oh yeah. And you look at companies like BlackRock that manage, $10 trillion. And so if you think, if they just put 1% or 0.5% of that capital in Bitcoin, that's a ridiculous amount, because a lot of people might not know this, that might be new to crypto, but to increase Bitcoin's market cap by $1 billion, you don't have to, put in $1 billion into Bitcoin to increase the market cap by $1 billion, because the market cap is determined by the price, not the other way around. So it's all about liquidity. If there's only, between, let's just say right now we're at like 43,000, give or take, if between 43,000 and 50,000, if there's only, let's just say $100 million worth of selling pressure, that means you just need 100 million to get the price to 50 million. To get the price to 50,000, sorry. Yeah. So you don't need, $1 billion to increase the market cap by $1 billion. So even just, a few billion coming in, that could really, increase the price quite a lot. And if you're talking about BlackRock with 10 trillion, that could definitely be a big deal.
There's going to be pressure. I mean, as soon as we go towards the all-time high, let's call it 70,000, some people are going to sell because that's their way out, saying, okay, I got my I'm back. I've got even, maybe I lost some money in fees, but I'm out for sure. But there's going to be people, they have been buying consistently. If you think about it, from 15,000, even where we are now, like who's going to sell? Like, I mean, you will have people playing shorts, maybe short trades, but this is not going to be enough to, I think, to move the market. And like you said, when they are going to go in with serious money, I think we will see some humongous volatilities. That's why some people are saying, guys, expect some volatility. Now, January, technically, it's a bad month, historically speaking, even though the worst is September for crypto, for Bitcoin especially. Yeah. So I don't know if we'll see a good month or a bad month, but like you said, I also like to think about it doesn't actually matter, because if you have a long time frame, if you think about it in years as opposed to weeks, then who cares? We might go up in October, down in January, up again in April, down in September. But then overall, it's gonna go up because this asset is going well through time. So I guess it depends on the strategy you want to play and your time frame. But I think we'll see all sorts of different people trading all sorts of different time frames. And I would imagine you as well. I mean, I don't think you are trading with your entire portfolio, right? You have a portion.
No.
Right?
Yeah. Leverage trades, I see that as, short-term trades, just like how I'd see a very small altcoin. I'd see that as a short-term trade, like quick in, quick out. I don't see, that as like a long-term investment. Like I'm not going to hold a leverage trade for 2 years. I'm going to be, fairly quick with coming in and out of that trade, just like with a smaller altcoin. But then, if I'm just holding spot Bitcoin in cold storage, that's something I could hold for a decade. And if I don't need money next week, I can just set that aside and forget about it, sort of thing.
Exactly. And speaking about trading, I know you have your own course. So guys, I'll invite you to go and check it out. I'll leave in the comments down below all Josh links. I know you have a trading course available for people to buy and download, right?
I appreciate that. Thanks a lot. Mainly covers technical analysis, really. So just basically learning how to read the charts, different patterns and signals and things like that. So yeah.
Yeah, there is a lot of love in here and passion. So yeah, guys, go and check it out.
Yeah, I can't complain about what I do for a job. I personally love it, but yeah, I will say there is more work that goes into it than what meets the eye. To make a 10-minute video on YouTube, it takes more than 10 minutes. So let's just say that. Video editing and making thumbnails and uploading and picking a title and then doing the research. Yeah, it adds up just to make a 10-minute video. But personally, I like it, so I don't really see it as hard work because I just enjoy doing it.
Yeah, no, same. I mean, for me, the best part is I have to talk to people like you. So it's amazing. I enjoy talking to people I like about things that I love. Pure joy right there. So thank you.
I appreciate that.
Josh, man, thank you so much. You've been an absolute legend. I appreciate having you on the show.
Yeah, no problem. Thanks for having me on. I appreciate that.
And guys, like I said, I will leave in the comments down below Josh link, so go and check him out. Happy holidays, and I'll see you soon, okay?
See you guys.
Cheers.